Hello, my name is Bernie Carter. Welcome to my channel, Bernie to the Rescue, and welcome to our video on the Employee Retention Credit. If you like the content and find it helpful, please like, comment, and subscribe to my channel, or simply share it with a friend or family member whom you love and may find it helpful. Thanks. Now let's get into the video. This credit is a part of the CARES Act, which was passed in response to the economic impact of the COVID-19 pandemic. The Employee Retention Credit is designed to help businesses keep their employees on payroll during the pandemic. Eligible employers can claim a credit of up to 50% of the wages paid to employees, up to a maximum credit of $10,000 per employee. To qualify for the credit, employers must meet certain requirements. First, the business must have experienced a significant decline in gross receipts, defined as a decline of more than 20% in the same quarter of the previous year. Second, the business must have suspended or significantly reduced operations as a result of government orders related to the COVID-19 pandemic. Eligible employers can claim the credit for wages paid to employees from March 13, 2020 to December 31, 2020. The credit is available for wages paid to employees who are not providing services because of the decline in gross receipts or the suspension of operations, as well as for wages paid to employees who are providing services but at a reduced level. Here are some facts FAQ from IRS.gov official website, determining when an employer is considered to have a significant decline in gross receipts. An employer that has a significant decline in gross receipts is an eligible employer that may be entitled to the Employee Retention Credit. An employer is considered to have a significant decline in gross receipts for the period beginning with the first calendar quarter in 2020 for which its gross receipts are less than 50% of gross receipts from the same calendar quarter in 2019 and ending with the earlier of January 1, 2021 or the first calendar quarter after the quarter for which gross receipts are greater than 80% of gross receipts for the same calendar quarter in 2019. How is the significant decline in gross receipts calculated? A significant decline in gross receipts is calculated by determining the first calendar quarter in 2020 in which an employer's gross receipts are less than 50% of its gross receipts for the same calendar quarter in 2019. If the gross receipts decline to that extent, the employer also must later determine if there is a later calendar quarter in 2020 in which the employer's 2020 quarterly gross receipts are greater than 80% of its gross receipts for the same calendar quarter in 2019. If so, the significant decline in gross receipts ends with the first calendar quarter that follows the first calendar quarter in which the employer's 2020 quarterly gross receipts are greater than 80% of its gross receipts for the same calendar quarter in 2019, or with the first calendar quarter of 2021. Example, employer I's gross receipts were $100,000, $190,000, and $230,000 in the first, second, and third calendar quarters of 2020, respectively. Its gross receipts were $210,000, $230,000, and $250,000 in the first, second, and third calendar quarters of 2019, respectively. Thus, employer I's 2021, second, and third quarter gross receipts were approximately 48%, 83%, and 92% of its 2019 first, second, and third quarter gross receipts, respectively. Accordingly, employer I had a significant decline in gross receipts commencing on the first day of the first calendar quarter of 2020 and ending on the first day of the third calendar quarter of 2020. Thus, employer I is entitled to a retention credit with respect to the first and second calendar quarters. Does an employer need to prove that a significant decline in gross receipts is related to COVID-19? No, the CARES Act does not require that the significant decline in gross receipts be related to COVID-19. However, employers should keep records for the relevant calendar quarters in 2019 and 2020 to document the significant decline in gross receipts. The records should be available for IRS review for at least 4 years. How is the maximum amount of the Employee Retention Credit available to eligible employers determined? The credit equals 50% of the qualified wages that an eligible employer pays in a calendar quarter. The maximum amount of qualified wages taken into account with respect to each employee for all calendar quarters is $26,000, so that the maximum credit for qualified wages paid to any employee is $5,000. Example 1. Employer M pays $10,000 in qualified wages to employee in the second quarter of 2020. Example 2. Employer N pays $8,000 in qualified wages to employee B in the second quarter 2020 and $8,000 in qualified wages in the third quarter 2020. The credit available to employer N for the qualified wages paid to employee B is equal to $4,000 in the second quarter and $1,000 in the third quarter due to the overall limit of 50% of $10,000 in qualified wages per employee for all calendar quarters. Here's how to claim the credit. To claim the Employee Retention Credit, eligible employers will need to file Form 941, Employer's Quarterly Federal Tax Return, or Form 944, Employer's Annual Federal Tax Return, with the IRS. The credit will then be applied to the employer's federal payroll taxes. Employers will need to provide the following information on their tax return to claim the credit: the amount of wages paid to each employee during the quarter, the number of employees on the payroll during the quarter, the amount of credit claimed for the quarter. Employers can also claim the credit on a quarterly basis, which allows them to receive a refund more quickly. It's also important to note that the credit is refundable, which means that even if an employer does not owe any federal payroll taxes, they can still receive a refund for the credit. Before claiming the credit, it's recommended that employers consult with a tax professional to ensure that they are eligible for the credit and to determine the best course of action. Initially, a business that received a PPP loan was not eligible for the ERC, thanks to the Consolidated Appropriations Act of 2021. However, a business who received a PPP loan may also apply for the ERC retroactively back to 2020. The caveat, however, is that you can't use the wages that qualify you for PPP loan forgiveness to determine your ERC amount. You'll need documentation that proves you're not double dipping and using both programs to cover the same wages. Let's say you use your PPP funds to pay for $50,000 in wages and you expect to qualify for forgiveness. In this scenario, you can't use those wages which have been forgiven to calculate your ERC. How to apply for PPP and ERC? You can no longer apply for a PPP loan, but you can still fill out an application for the ERC. If you'd like to claim the ERC, you can do so on Form 941X. Don't hesitate to consult a tax professional for assistance. The Employee Retention Credit is a valuable tool for businesses affected by the pandemic to help keep their employees on payroll. If you think your business may be eligible for this credit, be sure to consult with a tax professional to determine the best course of action. If you have any tips that could help someone else maximize their taxes during this time, please share in the comments below. Thanks for watching and stay informed on the latest developments in the world of taxes.